Did you catch that wild crypto swing last night? If you blinked, you might have missed XRP's dramatic dive, dropping a whopping 15% in a matter of hours. The big question now, is this just a blip on the radar, or are we watching the start of something far bigger? Today, we're going to break down the latest crypto news, focusing on XRP's battle around the crucial $2 support level. Is this your last chance to buy XRP before a massive rally? Well, imagine this. You go to sleep with XRP sitting, pretty at about $2.58. Then you wake up to find it down to $2.18. That's a 15% slide. Enough to shake even the most optimistic crypto believers, right? Well, that's exactly what happened last night, and it sent shockwaves through the community. XRP, like many cryptocurrencies, isn't immune to sudden market turbulence. In the last 24 hours, we saw a dramatic downturn. It was part of a broader wave of bearish pressure hitting the entire crypto market. But why did this happen, and what does it mean going forward? Well, market corrections often occur due to a complex blend of factors: large sell orders, investor panic, or even external news like regulatory changes, or most importantly, most recently, macroeconomic shifts. In this case, XRP was slightly caught up in a market-wide downswing. The token is now kind of hovering around the kind of $2.30 at the point of recording today's video. While that's kind of better than the lows that we saw, it's still down pretty sizable amounts in the past 24 hours. Now, if you've been following XRP's journey, you know that the coin has experienced a roller coaster of price action before. But this time, analysts are highlighting one very specific line in the sand, the $2 support level. So let's break this down, why this number is so important. So what's the big deal about $2 anyway, right? Well, think of it like the battleground line. On one side are the bulls defending their territory, and on the other side are the bears looking for a chance to break through. Now, when analysts say XRP needs to hold above $2, they're essentially saying that XRP needs to stand its ground to maintain a healthy upward trajectory. Now, according to prominent analysts in the crypto space like 𝗕𝗘, XRP's recent price action places it right above the 0.236 Fibonacci retracement level. For those who are new to technical analysis, Fibonacci retracement levels are like road markers that help us understand where the price may actually stall or potentially reverse. Now, the 0.236 level isn't as major as, let's say the 0.382 or the 0.618, but it's still a very key signal. Now, 𝗕𝗘 points out that holding above the $2 level aligns closely with another important Fibonacci level, the 0.382 retracement. Now, if XRP breaks below $2, we risk sliding towards lower support zones. But if it bounces and holds, it could serve as a springboard for a fresh leg up. So it's not just about random numbers, right? The $2 line is backed by historical price action, technical indicators, and of course, market psychology. Many buyers and sellers use these zones to set their orders. Think of it this way. If you're bullish on XRP and you believe in its long-term rally, you wanted to see the price comfortably sitting above $2, not flirting with it from below. Now, it's a confidence line. Now, let's kind of dive deeper into the expert views, right? Your 𝗕𝗘, a well-known analyst with a growing following, has been studying XRP's wave counts and making market structures very closely, right? As I have as well. And we'll get into the technical analysis later. Now, she mentioned two potential scenarios for XRP right now. The first scenario, XRP might be completing what is called an ABC correction, basically a quick pullback of a larger bullish trend. If this is the case, then once the correction wraps up near kind of the trend line, we could see a nice rebound. In other words, this dip could be a healthy reset, allowing XRP to catch its breath before the upcoming continued continuing even higher, I should say. And I'm going to get into the technical analysis, as I said, a little bit later, and I'll show you what my wave counts are as well. Now, the second scenario, however, is kind of less rosy, right? Now, XRP could extend its bearish movement and break below that trend line. If that happens, we might be looking at more downside. The deciding factor, you guessed it, that $1.90 to $2 range. It's like that tipping point, right? Now, staying above it and XRP can regroup and head upwards. Fall below it and the landscape starts looking a little bit more uncertain. But here's something crucial. Even in the bearish scenario, Cassie isn't predicting a total collapse. She notes that XRP is unlikely to break below the $1 to $2 range, meaning there's a strong base for support here. The zone could act as a safety net, offering some help and hope for the bulls, even if the price weakens further in the short term. In essence, Cassie's message is that while the pullback may feel scary, it's not the end of the world. XRP still has strong fundamentals and technical structures. The key is how it behaves around these technical support levels. Now, let's talk about another perspective. Market commentator Chad has a kind of more bullish take. He suggests that a double tap at the $2 level could act like a springboard, catapulting XRP to new heights all over again. What does that mean? Well, a double tap refers to the price testing a specific support level twice and holding successfully. Imagine bouncing a basketball on the ground. Each bounce that at the support line builds more momentum. If buyers constantly show up at $2, it sends a powerful signal to the market. We're not letting this coin go any cheaper. That can inspire more confidence and attract more investors. If this happens, the narrative shifts from can XRP hold $2 to how high can XRP go. This sets the stage for possible run at new all-time highs. While it's important not to rely solely on one analyst's opinion, hearing multiple voices from the community referencing the $2 level as a launching pad is quite telling. Now, the crypto market thrives on sentiment, right? When key influencers and analysts start pointing to a certain price level as critical, the market tends to, well, pay attention. If enough buyers believe $2 is a steal, that self-fulfilling prophecy can turn into real price rally. Of course, nothing is guaranteed, and traders should always consider their own risk tolerances and do their own research. On the flip side, we have a more cautious viewpoint coming from another well-known figure, Income Sharks. He's not fully convinced that XRP's green candle or big green candles, those large kind of daily upward moves, were driven by substantial buying pressure. Instead, he suggests they might have actually been fueled by FOMO, the fear of missing out, which can fade quickly. In his view, if XRP bulls can defend the, super trend level around the $2 and develop a more kind of steady pattern of bullish consolidation, well, but where the price currently moves sideways and potentially builds a solid base, then, well, we might actually have a more kind of rational entry point for buyers. In other words, healthy growth often comes from stable foundations, not just wild spikes. Now, this critique is valuable because it reminds us to kind of question big price moves. Are they driven by solid fundamentals and long-term interest, or just short-term hype? If XRP can hold $2 and start forming a pattern of higher lows and gradually inching upwards, well, that can attract more serious investors. But if it struggles at that level, well, we may see more volatility ahead. Now, we've mentioned Fibonacci retracements a couple of times already, so let's unpack that a little bit more for the newer viewers. Fibonacci retracement levels are based on the idea that markets retrace at certain proportions of a move before reassuming their trend. These levels are typically 0.236, 0.382, 0.5, and 0.618, and are commonly watched by traders. But we'll actually probably go into this in the technical analysis later. There are a few other levels that I also think are very, very important. Now, when XRP hovers around the 0.236 level or the 0.382 level, that means that the pullback by approximately 23.6% or 38.2% from its previous move. Now, traders look to these levels as potential buy the dip zones. If the price respects these levels and bounces, it suggests underlying strength. If it shatters through them, it signals deeper weakness. Now, combined with trend lines that drawn across significant highs or lows, these tools help traders identify patterns. Is the trend still intact? Are we still seeing a reversal? Is, in XRP's case, respecting that $2 level, which aligns with key Fibonacci retracements, would indicate that the bulls are still in the game. Now, market structure is essentially how the price action unfolds over time. Higher highs and higher lows is an uptrend, and lower highs and lower lows is a downtrend. Keeping this in mind, defending the $2 floor helps maintain the bullish structure, whereas losing it could suggest the start of a more prolonged downtrend. Now, XRP doesn't move in isolation. What's happening across the broader kind of crypto market right now? Well, Bitcoin trends often set the tone, and Ethereum's developments frequently influence the market sentiment. If Bitcoin can kind of takes a big hit, as it has done most recently, dropping down, I think, to $96,000 when I last checked, might have been a little bit lower, then it's common to see altcoins like XRP following, right? Conversely, if Ethereum is rallying and NFT marketplaces are booming, well, the spillover can affect the altcoins as well. Now, as of this week, Bitcoin has seen a bit of a tug of war, hovering around key levels that traders are watching closely. If Bitcoin's momentum stalls or falters, many altcoins, including XRP, struggle to break free from that kind of gravitational pull. On the other hand, if Bitcoin stabilizes or moves higher, it can create a more favorable environment for altcoins to shine. Ethereum's developments also matter, right? DeFi smart contracts and the upcoming protocol upgrades keep investors' eyes on ETH. When Ethereum's narrative is strong, the broader sentiment or market sentiment often improves. A rising tide lifts all boats, as they say, right? So XRP's fate isn't just about its own chart. It's about the larger crypto ecosystem. For XRP to truly break out and sustain a rally beyond $2, it would need help from the entire kind of crypto market, and the market sentiment has to be bullish. Now, watch how Bitcoin recovers from its downturns and keep an eye on Ethereum's momentum. A healthy overall crypto environment can provide the tailwinds XRP needs. Now, if you've been in the crypto scene for a while, you know that XRP has had its share of explosive rallies and gut-wrenching corrections. It's gone from a fraction of a penny in the early days to soaring valuations during bull runs. History shows that XRP's price often surges when market conditions are right. Strong investor sentiment, broader crypto adoption, and positive Ripple-related developments. However, XRP has also faced regulatory scrutiny, most notable from the SEC's lawsuit against Ripple Labs. Although the market's focus right now is on price action and technical levels, it's important to remember the fundamental backdrop. Legal and regulatory outcomes can influence investor confidence and capital inflows. Comparing the current situation to past rallies, it's evident that every successful long-term uptrend had several corrections along the way. Dips like the most recent 15% drop aren't necessarily deal breakers if the structure remains bullish overall, of course. Now, keeping the $2 line intact could be one such stepping stone in the broader long-term growth story. So, if there's one factor that you should kind of never ignore, it's market psychology. Crypto markets can swing wildly based on emotion. Fear can drive prices down just as quickly as greed can push them up to new heights. In the case of XRP, a lot of eyes are watching how it behaves around the $2 level. A confident defense of $2 could turn fear into optimism. Now, sometimes waiting to see if a support level hold can help investors gauge sentiment. If the price stabilizes and starts to move up, that might encourage hesitant buyers who were kind of on the sidelines. Conversely, if the price slips below $2, fear can take over and more selling can occur. As an investor or trader, ask yourself this. How do you feel about XRP right now? Are you anxious, excited, neutral? Understanding your own psychology can help you make more rational decisions. If you believe in the coin's long-term vision, a temporary dip might be seen as an opportunity rather than a disaster. So let's talk strategy. If you're considering entering or adding to your XRP position, watching how the price behaves around these key levels is crucial. One common approach is to scale into positions, buying a little at a time rather than kind of going all in at once. This way, if the price dips further, you're not overexposed. Stop loss orders can help manage downside risk. For instance, if you place a stop loss slightly lower than $1.90, you can protect your capital if the support kind of fails. On the flip side, if the XRP bounces confidently from $2, you can adjust your stops higher or add more to your position as confirmation builds. Another tip, well, keep an eye on the news. The latest crypto news, the Bitcoin trends and Ethereum's developments can offer clues about where the market is heading. Sentiment can shift quickly, so staying informed can give you an edge. So make sure to subscribe to stay up to date. So where do we go from here? In the short term, XRP may bounce around the kind of $2 mark, testing traders' patience. If it holds and starts climbing back up, well, we could see renewed push towards the $2.58 and beyond. If it fails, a dip towards $1.90 that is, or slightly below could happen. And to put that into kind of perspective, most analysts still don't foresee a catastrophic plunge like this. Now, in the long run, if XRP's fundamentals remain strong, adoption grows, and regulatory uncertainties clear up, as we have seen with Donald Trump's inauguration in January, a new SEC head that's going to be pro-crypto, well, we could see it claim new all-time highs. Remember, right, the crypto space is always evolving. Technologies, use cases, and regulations are in a flux. As the market matures, we might see more stability and clearer trends. Now, we've covered a lot of ground in this cryptocurrency market update. Let's recap the main points, right? XRP experienced a sharp drop from $2.58 to $2.18, rattling investors. Experts say that the $2 support level is crucial for maintaining a bullish outlook. Holding above this line aligns with key Fibonacci retracements and sets the stage for a possible springboard towards higher highs. Analysts like Cassie Trade see two possible futures: an ABC correction that eventually leads to a rebound, or a further drop that actually kind of respects the $1.90 to $2 zone. Meanwhile, Chad believes a double tap at $2 could catapult XRP to new all-time highs. Incoming Sharks urges caution, suggesting that a more stable consolidation at $2 would be healthier than wild FOMO-driven rallies. Now, in the broader context, Bitcoin trends and Ethereum's developments influence XRP's fate. As sentiment shifts across the crypto ecosystem, these dynamics can either support XRP's rebound or basically enhance these declines that we've been seeing. But even if XRP dips further, multiple analysts agree it won't likely break far below $2. So, what's next for XRP? Well, the market is watching that $2 level like a hawk. If the bulls manage to hold that line, well, we could see a return of a bullish structure and potentially a big leg of at least a new leg of the rally ahead. Now, if not, experts kind of warn that we should expect more volatility and even some bargain hunting opportunities around the $1.90. Now, in this ever-changing kind of crypto landscape, staying updated with the latest crypto news is key. Keep an eye on the price action, monitor the support and resistance levels, and pay attention to what experts are saying. But always do your own research and understand your own risk tolerances. Now, I'd love to hear your thoughts. Do you think XRP will hold the $2 level and kickstart another bull run, or are we heading for more downside? Let me know in the comments down below. Okay guys, let's spend some time on the XRP chart here. So this is XRP paired up with USDT. We're on the 1 hour Binance chart. And in the last video, I think it was the last video, probably around Saturday time, we did a little bit of technical analysis here, and we were talking about the long position, looking for the entry on the support of the 200 EMA. This did play out quite nicely until we kind of got a bit of a top up here around the 17th, and so we have seen, you know, major decline. But this was a really good entry coming in down here. You can see just how this entry basically we tapped into it and then launched. This would have been a great trade. Let me actually go ahead and just zoom out of that for a second. Had we been monitoring this, obviously this was not one I actually took. This is just an idea for the video. But here you can see it was a 16.92% without leverage. That would have been very profitable had anyone taken that. But of course, you would have had to have seen this reversal coming. We would have been looking at a break of this level here being our bearish signal, at basically a break of the $2.58 after we did rally up to a high of $2.72. Okay, so we probably would have actually moved the stop loss up to this area of 258. So we would have stopped out there, and then we would have seen this reversal come on down. Nonetheless, I'm going to take this off the chart now, and we can start actually reflecting on what is going on here, because obviously that idea, it didn't play out exactly as we were kind of expecting, right? We didn't expect to lose the 200 exponential moving average at this stage. Now, as I spoke about earlier, the kind of three-wave corrective pattern has, in my opinion, already played out. We had that down here, okay, and we broke up higher than the previous swing high. Okay, now as I'm gonna remove some of these fibs off here, you can see here that we had this retracement. We kind of broke above the 0.236, we broke above the 0.382, the 0.50, they even broke above the 0.618. We broke above the 0.702, but here you can see that we got rejected on the 0.786. This is the key fib level. Okay, so if we were kind of looking at this, we did actually get a close. We should have been thinking confidently here, but the next one was unfortunately a major downturn for us. So we can see here that the fib levels have held up. Now, with this most recent move to the upside, this can be a precursor to a bigger run. We are still looking for this next kind of run to the upside. Now, I'm going to go ahead and adjust the targets according to our existing low, and I'm going to show you what the bullish outlook looks like. Okay, so on the bullish side, we are looking for $3.21 to $3.78 for a fifth wave higher. Okay, that fifth wave up is going to be encompassing a wave 3 on a macro scale. We'll talk about that in a moment. And you know, we are either starting this or we're in a kind of still the wave 4 situation with it potentially still going down deeper. Okay, so at the moment, if we have bottomed here at $1.90, then $3.21 to $3.78 is the target. However, there's still one potential bearish movement, which could potentially lead this into a more bearish situation on the short term, which is a giant three-wave corrective pattern, keep taking us down significantly lower. Now, for that, you know, no disrespect to other analysts and what they're seeing, but I'm going to go ahead and draw this in as per I see it, which is basically down here we have the wick high coming in at the $2.72.81. Okay, so I'm going to go ahead and just adjust this to $2.72.81. I'm just going to go ahead and check it. That is correct. $2.72.81. Okay, I'm just going to move this down using the arrow keys, and there we go. Okay, so where is that bearish outlook? Well, that bearish outlook tells us that we should be aiming for a potential dip. If we do lose that $2 support level, that dip is going to be down here. It's going to basically be on the low side of 161.13 to 178.17. We don't want that necessarily, but you know, it's something that we need to kind of think about. Now, there is of course a bigger play here. If we do this and we do in fact have this kind of bearish breakdown, well, the lower that the wave 4 goes, the higher that wave 5 goes. They relate to each other, right? As you can kind of see here, how these targets at the 1.236 and 1.618 on the high side, just up at a yellow box. As I pull this down, you can see those numbers go higher and higher and higher. Okay, so if we do come down to 161, well, actually, in the short term, that's not actually that bad, and in the long term it gives us a projection of $3.34 to $4.19. Okay, so if we do go down lower, it's not the end of the world, it's just a correction for a bigger wave 5 later. But for the most part, we don't expect that. There's a lot of buying pressure in these lower ranges. Okay, let's go ahead and zoom in here just for a little bit. And I'm going to highlight the range of interest, which is essentially this one right here. And I'm going to go ahead and pull this all the way across just to give you a bit of an insight into that. And I'll remove that one there. Okay, so this here is essentially $1.90 to $2.13.26. When we've come into here before, we have seen buying pressure. That's not to say that it's going to always be here, but it's something to also consider. Now let's go ahead and take a look at our momentum. On the 1 hour time frame, we are looking for a bit of a correction on the 1 hour momentum. We are looking for a move to the downside. On the 4 hour time frame, we're starting to see progression upwards. I wouldn't be surprised if we do see a continued upswing from here. So I'm not thinking terribly too bearishly about things. Now, if we come back to our 1 hour time frame, turn that off and bring in the relative strength index, you can see here it's just testing out the 50 level. Okay, this is bearish territory at the moment on the relative strength index. There was some bullish divergences here. If I go ahead and bring out the price action, essentially this was coming in here as we did have lower lows on the price action, but higher lows on the relative strength index. If we do that again, we could potentially see a precursor to a bigger run to the upside on that price action. So we want to see how that kind of plays out. Okay. So with that being said, what else can we see here? Well, if we come into our histogram, the MACD histogram that is, what do we see? Well, we can see here that we have a lower low, okay, on our price action. We've got a couple of different ways of doing this, okay? So we can use the bodies of the candles if you want. I don't usually do this, but it's going to make it a little bit easier to see what I'm looking at. And then we have down here, higher lows on our histogram. That shows weakness within this move to the downside. So straight away, we know that there's actually potential that this is going to be bottoming out soon, and we're likely to see a bit of a run to the upside. We can also see a cooling off in the buying momentum as well. We are lower than the 200 EMA, so we do need to be thinking bearishly on the 1 hour time frame for now. But I do think as we start to scale this up into the larger time frames, like the 4 hour time frame here, well, we can start to see that the momentum on the selling side is waning off a little bit, as well on the buying side. This is what we were monitoring before we got the big leg to the upside. We were monitoring a cooling off of both the sentiments, okay, and we're looking for a big trigger to the upside. Now, our analysis tells us that we are looking for a wave 5 to the upside, and well, here we're seeing the consolidation of momentum waiting for that next big run. So I think we are going to see a significant surge to the upside. Our 4 hour time frame as well here is also showing that the 200 EMA is in a bullish position. You can note that here the 200 exponential moving average sits at $1.99. A retest of this area, I can't rule it out, and it would actually be a strong foundation for support around that $2 level. Okay, so potentially the bottom is already in here at 190. The local bottom is in for 190, and we're going to look for support, whether that's $2, $1.99, or maybe we do get that bearish flush out. It's okay, because either way, we are looking for a fantastic run to the upside. Let's go ahead and scale this to the daily time frame. On the daily time frame, as you can kind of see, we're tracking for the final kind of fifth wave within our wave 3. Once that is done, we're going to look for another wave 4 and another wave 5 to finish out another wave 3. Everything is kind of nested inside each other. It's understanding this structures are very important. So we have a wave 4 going on, which is basically a wave 4 of the wave 3. Okay, and that wave 3 is a wave 3 of another wave 3 on a larger scale. If I zoom out even further, you can see that macro scale really coming in for the entire bullish market, where we're tracking an A, B, and C structure on the kind of multi-year cycle. Okay, so we have data from 2020 up to 2021, the bear market, and then 2025 or 2024 to 2025, we're going to be looking for $5.57 to $11.22. Okay, so everything is kind of playing out quite nicely. We have to appreciate that nothing moves up in straight lines. These corrections happen, and well, we've kind of been foreseeing them. So for the most part, it's not the end of the world. We want to be going long, not short in my opinion, but we want to make sure that we have, you know, proper stop losses. We're using proper risk management. 1% of your trading account, we do something between 0 and 5x or 1 and 5x leverage. We don't do crazy, you know, 50% of your trading account on cross leverage with 100x position. That's just gambling. You want to be using proper risk management, proper trading strategies. 1% of your trading account, 1 to 5x leverage, tight stop losses, greater risk reward ratios than 1.5. If you can get greater than 3.0, even better. So looking for those kind of parameters is basically how you're going to be setting yourself up for success. But anyway, in the case of XRP here, this correction might feel really brutal to some. This is a potential last opportunity to get in before this fifth wave move up higher and completing out that wave 3 structure. Of course, this is just my thoughts and opinions on the data in the charts as I see it. What do you think? Let me know in the comments down below. If you found this useful and informative, smash that like button, subscribe if you're new, and don't forget to check that video out right there. It's one you don't want to miss.